Hello, everyone, and welcome back. Let's talk about an IPO. No, it's not an IPO. This is an uplisting from the OTCQB. It is trading currently by the ticker symbol KNWN. You can see that listed here. And Known Labs, that's what it's called. The company is going to be uplisted this Friday. And I also want to talk about one other stock. You're going to want to stick around to the end of this video because as I was doing my research on this one, I actually ran across another stock that I was like, wow, that's actually very interesting. And I'm curious to see how it develops. And it's at a better price than this. And this is at $2. And you're talking about two penny stocks, Randy. I know. But hang in there because I think everything in this market is getting beat down. And some items might be finding levels of support. Now, development and commercialization of proprietary biosensor technology. We're talking about glucose monitoring systems. And for those of you that have been following me and you watch the Senseonics videos, you know I've done a little bit of research in this area. 450 million individuals suffering from diabetes, 1 billion individuals with pre-diabetes. Total addressable market, right? It's huge. So diabetes, that's what we're talking about. We're talking about monitoring devices. And I will tell you that I do believe that in the future, self-monitoring and these monitoring devices and what Apple's doing with the watch, I believe that this is going to be standard practice. I think that we're all going to be doing more self-care, self-monitoring in the future. So where is this company at in the process for commercialization? Because this market is absolutely unforgiving. If you're not generating revenue, you're just not going to make it. So how much revenue is this company generating? 4.36 million in the last 12 months. Wow, I wonder how they got that. Some of you may already know, but for those of you that don't, stick around because this is very interesting. Now, 93.7 million market cap, not bad at all, I'll say. And then a net income right here, negative 14.5. Now, can they continue to generate this revenue? That would be very interesting to find out that answer. Now, let's see. We've got 3 million shares that they plan on issuing, and we got $2 as a price point. Let's take a look at how you get this. If it is an IPO, you can get up to 12 free stocks if you open and fund a new account. You can find that in the comments below. Be sure to check out this two-step process. It is a two-step process, but it costs you nothing. $1 to fund the account, but the first thing you want to do is open the account. You're going to get 2 free fractional shares valued up to $300. And then when you deposit any amount whatsoever by the end of this month, you're going to get, within 10 days after opening that account, you're going to get 4 to 10 free fractional shares, each valued up to $3,000. So be sure to check that out. It's in the comments below. Let's check out the offering overview. Okay, so what are they going to be using the proceeds for once they get that money from us? Research and development, sales and marketing, general and administrative capital investments, working capital, and general corporate purposes. So this is all talking about just making it through FDA approval and continuing to do the testing that they need to do internally because this device has not been proven or tested yet. So we've got a company overview and they've got some highlights invested. And I'm not going to bore you with any of this, but I will tell you they are doing a comparison with Dexcom. And you just know the size of this company, how long they've been around, and they're the top leader within their industry. So I would say maybe not a fair comparison. They do have a timeline, project milestones, and you can see September of 2022, the plan uplisting to the New York Stock Exchange. So what I want to see that timetable that's actually going out, but it's very difficult for them to really be able to measure where they're at in their clinical trials, how long that's going to be completed, then FDA approval, then they got to find their tier suppliers, then they got to make those critical relationships. So what we have here is we've got a total addressable market, right? That slide does me no good. So the company has 2 trademark items. They've got the No U, and then they've got the U band wearable device, and then this would be a device that you pretty much charge, place on your hand, and you could get a reading that's non-invasive. And what's important about this technology, and another company's got a very similar technology, we're going to talk about that shortly, no finger sticks or evasive CGMs, and this is continuous glucose monitoring like Dexcom 6G Abbott Freestyle Libre, or the Medtronic Guardian. Now, these are the most popular glucose monitoring devices that are out there. And most of these have something that you have to stick in the back of your arm, and then you have to wear a device on top of that. And then you have something that reads to your cell phone, and you can even program your loved ones to get notifications if your figures drop to specific levels. Now, what's really important about this slide is critical development steps. This is everything they have to do before they are going to start generating revenue. But remember, we did see $4 million in revenue, so where are they getting that from? Now, let's take a look at what they're doing to say against the competition. Are we spot and continuous, or spot check, continuous, so on and so forth? They've got a table here, not too robust, but an average annual cost, because you don't have to have all of these extra devices, is what they're saying, that they are more competitive because people will have to pay less by just being able to place their hand on here or wear the device, and solely that. So executive leadership, you can see we've got a few people here. And the thing that I want to compare is the board of directors really is just a duplicate of who is on the executive leadership team. So they also mentioned that they have a patent portfolio and an IP strategy, 38 patents, RFID technology trademarked, name there, Chromal D. And then down here, it's very small, hard to see. I know it's hard to see on these slides. They're kind of blurry. Known Labs technology is in development, and there is no assurance that the development will have a successful outcome. Past performance is not indicative of future results. There's no guarantee that any specific objective will be achieved. So you can see they've been working on this from 2012 all the way to 2021, and they are still working to prove this technology. So just important to understand that there. RFID preclinical internal testing. They're still working through this with full preclinical report, working on their data complete, so that way they can turn it into the FDA. So they're continuing to also manufacture partnerships, and you can see some of the partnerships that they mentioned here, but also that same note at the bottom. And then lastly, we have a bio RFID path to market, and where they are at here for FDA clinical trials. And you can see a full pie or a portion pie. They are 1/4 of the way there. And they have these sub-bullets. FDA clearance obviously is where they're trying to get, with production, manufacturing, and commercialization on the rise. They cannot generate any revenue until they've done a lot of things. Let's take a look, because this company also has a Discord. I found that very interesting, just because also the way that they generated their revenue was 4.2 million in NFT revenue. They have this other portion of the business, AI Mind Incorporated, that generated $4.2 million. So if you go down here, you can see it was available on OpenSea. They had Explosion of Color, Singularity, Light and Dark, NFTs. AIM subsidiaries has sold more than 1,000 NFTs to generate revenue excess of 1,000 Ethereum, which converted to approximately $4.2 million. Additional revenue may be generated from NFT sales during the first fiscal quarter. So very interesting. Let's take a look at the charts, since we can take a look, because this is actually trading on the OTC. You can see down here it's went as low as 117, and this is in the daily chart. So this goes back to that June, July timeframe when everything was down in the market. You can see it reached down here to 117. It's had a support line, it looks, of 196, and then it's met some resistance here up at around the $4 mark, I would say. About the $4 mark. It's currently sitting at 274. Just interesting to understand that, and that on September 6th, they had a pretty significant run up in the price. So I'll go ahead and tell you that, to me, this smells like a pump and dump. And I do want to point out the risk that is in the filing, the updated filing. You will experience immediate and substantial dilution as a result of this offering. As of June 30th, 2022, our net tangible book value was approximately 4.9 million, or approximately 11 cents per share. And then down here, it's got some other language that June 30th, 2022, if you purchase shares in this offering, you will suffer immediate and substantial dilution of $1.78 per share, or $1.77 per share if the underwriters exercise the over allotment option to purchase additional shares. So just plan on this having some dilution after its release. Now, I believe the lockup period on this, and that's something else you want to look at, is 6 months from the point that it goes public. But let's take a look at these NFTs, and I also wanted to take a look at the names behind them. So here is Philip, and then there was this other name that I wasn't familiar with, but I did a little bit of research and found it here on Twitter. If you wanted to check that out, here's some of the artwork. And then also, I believe this is the guy, but I don't know for sure, a director and photographer. And here's some of the other art that was available if you want to take a look at that and see. For those of you that know NFTs pretty well, you know, you could do further research. So let me know in the comments below if this is something that is legit. I mean, this is something they could continue generating money for. Could this be the next big meme stock? And let's transition over to the second stock very quickly, because when you're thinking about continuous monitoring, glucose monitoring, patient monitoring, clinical trials, health and wellness monitoring, lifestyle management, pharmaceuticals, fitness, I mean, there is a huge market here, and Apple is trying to address that market. Alcohol, glucose, lactate, I mean, care, body temperature, hydration, blood pressure, heart rate, respiratory, blood oxygen levels, you name it. I mean, there is definitely an opportunity in the market. So who is addressing it right now? Who's working with Apple to try and address this? And this is the company that has been under some ridicule, but they are much further along in the process, and they're half the price right now. So if you want to check out Rockley Photonics, this is one that has been working since 2017 with Apple, and it looks like they are pushing out until 2024, because I mean, who knows? I don't know if Apple is so secretive that you don't know if it's Rockley's or if it's Apple's fault, but they did get a damaging report. Let's take a look at that, because I want to be fully transparent. Iceberg Research on April 22nd came out with a report and said, look, you guys there's something wrong. There's something seriously wrong. And I think it was at about $3 at this point, and now it's at $1.19, I believe. But I mean, check this out and then look at the total revenue outlook. It might be a little blurry on your screen, but they were supposed to be generating revenue of about 300 to 320 million in the guidance, and that was an adjusted guidance for 2023. So let's see what happens. They are supposed to be transitioning from the consumer wearable devices market, where Apple and a lot of these others were customers, to medical devices or med tech, which is 10 times more profitable, but they are further along in the process. I don't know that their device is FDA approved, but it looks like it might be acceptable and be used. So, I mean, just definitely do your due diligence. If you're going to do this whole pump and dump with this stock, which is, I believe that's what it's going to be. I think it's going to have a huge pump and then a dump. If you're looking to get something at $1 and you've got money to leverage in the glucose monitoring device space, I believe that this is where you put it in the stock here. That's where I would put it, but I'm not, because look at their product roadmap. I mean, we're just talking about glucose monitoring with the last device, and they are working on a significantly much larger portfolio of pro biomarkers, baseline biomarkers, and then they've got some future ones that haven't been identified by the other company. I mean, to some extent, they may be thinking about these things, but I mean, I believe that these guys are much further along in the process, and if you're going to go with a company that you're unsure about, maybe go with one that's just been in the space a little bit longer. Not only that, but I want to scroll down here to the number of PhDs and people that they have in the company. They've got about 111 PhDs and 212 engineers, and from people from all across the industry. So I know that this company has been getting a lot of heat, and you know, I think it's worth looking into it. Matter of fact, I listened to the earnings call, and the analysts on there were pretty tough on the CEO, but it looks like they're going to be coming out in the second quarter or second half of this year. I would say the first half of next year with some developments. I expect to hear some developments from this company, but they are going to be further along in the process. Ultimately, that's all I got for you. If you enjoyed the video, be sure to subscribe to the channel. hit that thumbs up button, and I'll see you in the next one.